How's everybody doing today? If you're out there typing a wire, yes, everything's coming through loud and clear. Let's start off with the risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptocurrencies. You know the risks. All right. Good morning, everybody. Happy Monday. Let's get started. Just tuned into the chat here. Want to say hi to everybody. Make sure we are live. Everything's coming through loud and clear. Yep. Perfect. All right, weighing in the house. Donna is here. Tron here. Chris here. Susan, good morning. Linda, Fran, David, what's happening? Nice to see everybody. All right, lots to talk about from last week. Pretty exciting week, to say the least. It was a much anticipated FOMC week, and the markets responded to what we kind of expected, which was the rate hike is coming, the markets know it, and it's more or less priced in. We're looking at potentially 6 more rate hikes this year by the Fed. Statistics are showing that on average, after that first rate hike, which we can mark right in here. So right below here, you'd put in a new row for the 316 rate hike. And on average, over the last 50 years, the markets have responded favorably over the next 12 to 24 months. Now, we marked this last week on Friday. We did our Monday, Wednesday, Friday sessions. Wednesday was a bonus session for FOMC. We went ahead and marked from our rate day. So this was our 316 rate hike, 25 basis points. Market responded with one of the best weeks we've had since I think 2020. Post-pandemic, of course, when everything was recovering in March and April. 6.9% post-rate hike right here. This is that 12-month target of 6.9%, and then our 24-month target of 19.3%. Again, based on that on the 50-year averages. So is the market still going to rip this week? We'll find out. Pre-market's a little bit slower. We're stalling here at 444.23, so down about 30 cents on the SPY. The DIA also down just under a dollar. It's not much, like 30-40 cents. The Qs are down around $1.50. But you can just see a really nice recovery off the lows. We're still in that correction territory. Everything's still down for the year. I mean, we're not out of the works yet. So for the year, Nasdaq is still down 11.19%. The S&P is still down 6.36%, but it cut that in about half. I mean, the S&P was down 11-12%. Now it's 6.36 down. The Dow is down negative 4.36%. The 10 years up. That's the TNX. It's up well above 2% now. 2.15 was closed last week. Bitcoin still hanging out around 40K, but still very indecisive. And oil reclaimed the $100 mark. So let's look at dollar index, oil, gold, silver. Take a look at some cryptos. This is going to be a pretty important week to watch the US dollar for this reason. If we have a break, retest, go, the dollar looks to get stronger this week. I do have a chart alarm sitting here at around 12,250. If the dollar closes below 12,250, I think that we are heading back down towards support levels and yearly pivot. I also think that is the best case scenario for stocks to stay bullish. The dollar has to get weaker, in my opinion. So that's going to be something I'm watching this week. We have pulled right back to past resistance becoming support. It wouldn't surprise me if we get some bullishness to kick in, and this remains somewhat bullish to the upside. Remember, I don't think that the markets were necessarily expecting 6 rate hikes this year, or 7 if we include what happened in March. We're going to do 6 more before the end of the year. Consensus says 1.9% interest rates by the end of the year. That will affect borrowing, that will affect the 30-year mortgages, that will affect a lot of things. We also have to look at the Fed as this is their way to potentially, this is their way to try to tame inflation. And of course, they're going to be watching inflation numbers, CPI numbers for the next couple of months, especially to see if it's starting to peak, starting to decline. And then, of course, see what this, potential stagflation monster is all about. That's being thrown around right now as a concern with stagnant wages and stagnant growth, but also high inflation. So a lot of stuff obviously to digest. Not nearly as much to manage this week as last week. So I did actually, all in all, we had a great week in trading. Forex wise, we made like 1,400 pips. Stock wise, we had several winners that got called away. No complaints on that. I'm looking to close out Square for profit today for probably $18 to $20 a share. High volatility, some of those tech stocks, if we have them, Twitter was one, Snap, Square, PayPal, any gains on those stocks, I'm looking to kind of let those go for, whatever we can get. It was a nice week last week. If we continue that pace, that's fine. I might miss out on some of the joyous runs of technology short-term recovery, but I'm not going to be super greedy. I just want to get some of the capital back, the free margin back, and be able to work with it. So I took profit on Palantir with a covered call, Under Armour with a covered call, Twitter with a covered call. I did get assigned in a couple of stocks last week, SoFi, SLB, and CTRA. So we'll be talking about those this week in Equities on Demand. We have a whole list to go through that I'm starting to note right here. So ready to tackle week, everyone, in Equities on Demand. So we got lots of stocks to review today, as well as issue some additional trades. And then in Forex, let's keep going through oil, gold, silver. We'll get into some currencies. Oil, a fierce rebound off the monthly pivot. So we went from 130 all the way down to 95, below that actually. Now, I'm still wondering from just a price action standpoint on oil, is this a capitulation move up? This is the start of a correction? I don't think so. I don't know if we're going to have just that much volatility or if this is up to down, which is just giving us another higher low, and oil continues to stay and remain bid. Last time I checked, Russia-Ukraine's not going anywhere. A stalemate is not the same as a ceasefire. You may have been seeing that or reading that over the weekend. They're probably still going to drag on conflicts and fighting for weeks, maybe months. I don't know. But I think oil and commodities are still subject to stay relatively bid. So anyway, I mean, we're watching this, right? If this translates into higher commodity prices, we're still watching tickers like DBC, DBB, corn, FTGC. You're watching oil. In currencies, you're watching the Aussie. You're watching the New Zealand. You're watching the CAD. Take a look at your currency strength chart today. We had Aussie weakness going into around 6:30 this morning, bottomed out recently, and the Aussie's making a nice little comeback. The Swiss was one of the strongest this morning, starting to come back to baseline. CAD is staying middle. New Zealand dollar starting to tick back up along with the Aussie. So we will see if there's another kind of breakout where commodity pairs do pretty well. Again, take a look at the correlation with commodity-based currencies and oil. All right, and gold, and silver, and corn, and wheat, and soybean, right? And lumber. I mean, everything. So a lot of volatility. That's what we know. I was talking about this last week. Will we have high, low, lower high, lower low, or will we go high to low? And this is going to kind of show some indecision, possibly form a wedge here at the top. But because we're coming off this bullish trajectory, any type of indecision, I would say probably still maintains some bullish bids. So I'm still in favor I mean, well, I don't love it, but I'm saying as a trader, I'm in favor of keeping the bullish trends and the momentum intact with the energy sector and oil and commodities. I think that's the play that we have right now. All right. Let's see here. David says analysts are saying demand destruction for oil is about 160. Meaning what? Like that's if it gets that high, meaning like people will just be boycotting oil essentially, trying to, even though it's in everything. Yeah, I mean that's fair, but guess what? That gives us now $51 of upside. I wouldn't be surprised, and I know there's probably rumors out there that it could go into some type of flash crash move into like $200 for a moment. So we just know that the trend has been pretty strong. The trend has been fierce. So I'm not trying to fight it. Right? Good stuff. Okay, so that's oil. Let's go gold and silver. Gold and silver recently retested those highs. Gold has been off of those highs. Again, we're talking back to the 2020 spike. So this is August 2020. I don't know if gold is necessarily coming all the way back down. We have resistance way up here. We have equal lows all the way back down here towards 1700. What I'm looking at is what happens now. So is it high to low, a little bit of a correction here on gold? We try to get back to these highs again, but then fail. It's very possible, right? Again, watch the US dollar. If the dollar gets stronger, gold is probably going to get weaker. If the dollar gets weaker, gold is probably going to get stronger. Okay. So I want to see what price does. One thing I talked about last week with the Flex Trading Room is high to low. If we have price drifting a little bit lower, I would actually like to see this opportunity. Some type of falling wedge, some type of oversold conditions, past resistance becomes support. This is almost like the 50% zone. If we have lows here and highs here, and this comes back to around 50%, I could see a lot of demand, a lot of buying interest there around 1850 to 1800, and see if gold has the ability to get back up and retest those highs at 2050 and 2075. So something we'll be watching this week and digesting on gold, but gold will definitely play out with the U.S. dollar and moving most likely in opposite directions. So if dollar is weaker, gold should be maintaining bid. If the dollar is stronger, gold will probably decrease a little bit. Silver, still have a really good technical trade here. I'm looking to get bullish on silver, stay bullish on silver. We've been bullish since these lows around 21.75. Trying to take silver all the way up to 29 to 30 bucks. Still going to remain bullish and keep accumulating in these low 20 areas. Let's go to crypto for a second. So, courtesy of Michael mentioning, Michael R mentioning our, if you type in the word total in TradingView, it gives you the total crypto market cap, 1.842, which has been slowly on the rise. Not as high up as we had 3 trillion plus back in November. CoinMarketCap.com does not show it above $3 trillion. But nevertheless, I mean, we're certainly not at the same levels we were when we had the peaks when Bitcoin is at 68,000. But we're sitting at 1.841 off the recent lows. One thing that I keep watching is my alerts. Okay, my alerts on cryptos have not activated. Recent highs, recent lows, still sideways. You know, it's a little concerning. Is this high to low? Is this a correction in here that will proceed lower? I don't know yet. Just saw an article this morning. I didn't read it yet. I'm going to. It says the man behind Ethereum is worried about crypto's future. It is apparently the creator of Ethereum. So I want to take a look at that article. We'll probably talk about it this week in Flex, or I'll just share it with everybody. But here you can take a look at it too. It's in Time. I would say Time Magazine, but it's no longer a magazine. So there's an article if you're interested. Check it out in the chat. But nevertheless, targets that we've noted. I've got my alerts set 30,000, 25, and 20. We have that 2021 yearly pivot at 2,700. Has not been filled yet. We have a pivot cluster to the upside. We obviously know our highs around 65 to 68,000. I think the case is being built where this is pretty solid support. There's probably a lot of analysis that shows this. Support. If we can hold this level and maintain bid, then yes, everything looks great to go back to 70,000 plus. This is a potential trader's range, right, where we can buy support. However, because there's probably so much interest in this area, and with the futures market, I wouldn't be surprised if they run those stops in the futures market and we end up creating a lower low that might be a little bit concerning, but if we create a bottom from there, then we start making that full recovery after. But that does mean that from 25 to potentially 20K to possibly lower, crypto gets really ugly. But we don't know. I don't know. Chart alarms haven't been activated. Cryptos have, for the most part, been pretty contained, and I don't know if that's good or bad. If traders are looking for tons of volatility, guess what? You're not getting. You're not getting it. You're getting a lot of indecision. But same thing on Ethereum. Trading at 29.24. Chart alarms set at recent highs and lows. They have not been activated. So just kind of patiently waiting to see what's going on. Litecoin, I like this potential falling wedge. I'm looking for a nice little rally, and I wouldn't be surprised to see some of those alternative coins outperform Bitcoin in the next couple of months. Litecoin could be one where this structure sets up, breaks out, and has room to start making a run towards this nice pivot cluster. We have a yearly, a monthly, and a weekly, all right there around 220. I think Litecoin has a great opportunity for about 100+%. There's some other ones that look the same, like Solana. Technically, if we get on the right-hand side of this trend line, we have some oversold conditions. I'd really like to see this. Maybe we have a falling wedge like so. Maybe price comes back and retests some lows, but on the right-hand side of the trend line, builds a base, makes its way back up. Again, pivot clusters, yearly pivots, pockets. If we're buying this thing at, $60 and we have a halfway point at 160, there's a lot of upside potential without asking or requiring price to make new highs. Same thing on and this is the same as tech stocks. If you have tech stocks you've been starting to buy at 40, 50, 60% discounts and they're up, I'm not asking for tech stocks to return to all-time highs. I'm not asking cryptos to return to all-time highs. I'm looking to see, do we have just a recovery? Do we have a wave cycle? And if so, it wouldn't be a bad idea to take some profit on some of these if you have it. Okay. All right, Tron, would you like to make a few requests today? Just going to ask. I got it. So you want the yen basket? All right. resistance coming. Look, I mean, I was talking to a friend of mine last week, guy that I traded with for a long time. We were talking about the JPY basket last week, and we have this pre-summer push going on. It could be time now that the Fed is out of the way. Markets are looking for any type of optimism. I think if we didn't have Russia Ukraine going on in the background, I do think that the markets would be responding more like broadly and probably more aggressively. There's still a little bit of hesitation to see, if inflation still drags out, commodity prices get higher. I think that's going to weigh on a lot of things. But as far as the yen has been one of the weakest currencies. This is seen by last week's price action on Friday. So Friday last week, the euro, the yen really really soft. Today, not a ton of volatility on the vertical scale, but still noticeable that the yen pairs have done some damage. You can look no further than any yen pair, but the one we've been watching the most is the dollar yen. Okay, dollar yen sitting at 119.19. Now this might be a little bit of a runaway move. I think that there's some major resistance coming up around 120. We took a small sell trade last week at 118.40. It did break through a little bit higher than that. We have breakout pockets around 116.45. We have an amazing bar count that's now over 300 based on a daily time frame. This capitulation move, I'm not looking at, I'm not trying to exactly call the top, but I do think that once we hit a reasonable number, this thing drops hard. Pocket, EMAs, balance, yearly pivot. I mean, it could be something that's difficult to catch. It could be up, 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 and then sharply declining. This could be something where maybe we just go sideways for a while and we break some structure like so and then just roll over. I mean, we'll have to keep our eyes out on what this does to kind of form these tops. But if the dollar yen can form a top and start to decline, I do think that the entire basket goes with it. So Aussie yen, same thing. We have major resistance ahead. We've had this 3 or 4 day breakout from last week post FOMC. I'm looking left on the charts. To me, this was in a bigger time frame. This to me looked like a great rising wedge. We had this level, this level, this level. I'm looking for this to stay back in the structure. So this week is going to be interesting. Does the Aussie yen continue to run, untamed and unchecked to the upside? Maybe hits 90 as a big round number. That's multi-year highs as well. We can zoom out and show, I think that's 2016. We're talking 2017 highs all the way back to 90. So are we coming back to retest that? Maybe. But if we come back to retest it, I think this is also a really good spot for some major resistance and then some rebalance. So I don't think that having JPY strength is that far away. I'm just thinking of, the next maybe couple of weeks. I mean, we still have, a week and a half left to trade? So all of this week to March, all of next week through Thursday. So we almost have 2 full weeks of trading to finish up the month of March. And over the last several years, talking about this pre-summer push, I've seen March into April into May be very different directions. So we might be looking at a top or bottom forming end of March. In this case, some of these JPY pairs might be forming some tops. And if that's the case, maybe April and May is that rebalancing and corrections. But I do expect there to be good trends. So if you're following your indicators, following your price action, following your directions, I think stay with the current trend. And if we have some highs and lows, we're noting these larger levels, right? We're noticing all these big levels here. CAD yen, are we creeping up into this big pocket from 2015? Possibly. Is this another rising wedge? Sure looks like it. I mean, that to me looks like a rising wedge. So the fact that we had this big breakout post FOMC, we have pivots that have been missed. If this is a rebalancing week, okay, what goes up during FOMC comes back down shortly after? I don't know. But it is the Japanese yen. So we always try to trade this one delicately and try not to, pick highs and lows necessarily, or if we do, we're trading very small. So I like that. Look, I'm not really deviating from my setups. I think that there is strength ahead on the JPY. I just don't know what that spells for the stock market, But I mean, what's my exposure? I am in the Aussie yen short, small positions. I'm in the Swiss yen short. I'm in the dollar yen short. That's it. So the rest, I'm not saying that I'm gonna add more, but it might be worth considering maybe a bit of a hedge where if I'm Aussie yen short, maybe I need to consider doing New Zealand yen long or CAD yen long. Even though I don't necessarily love that direction because I'd be buying the high, it's like if this keeps stretching, I'd be aggressively eliminating risk and trying to protect some of those profits and hedge against some of those positions that I'm already short and it's not cooperating. Okay. All right. So JPY basket, we'll keep an eye out for. I mean, hopefully nobody's crazy exposed and crazy over leveraged because that's a problem. It's a Japanese yen pair. You never want to be trading these things too big because they can be problematic and very aggressive and stubborn trends. But I think technically they're really good setups, and the forex market is still one of the purest technical markets. So even though it looks like what's going on is broken, well, look left and look at a higher time frame, and I'm thinking everything's going to be okay. Okay. All right. Anything else? Let's take a look at some other pairs. So for this week, I'm trying to look at some currencies that I'm interested in trading. We had some volatility around the Aussie CAD, which we did get long on last week around 92.95. So I'm looking to see if the Aussie CAD can revisit these highs. The Aussie New Zealand has been stopped out at break even. So I'm just going to wait and see what happens on Aussie New Zealand. Are we officially going to break the highs at 108, get into open space to the upside, or are we respecting this channel where this resistance holds and we do in fact come lower? The RBA is not raising rates. I don't know if the Aussie is getting additional, strength as far as currency strength. I don't know if the Aussie is getting more love because it's mostly commodity based. You got iron ore, you got copper, you got kind of the myriad of commodities that the Aussie plays with, where dairy, cheese, meat. That's mostly New Zealand. So maybe the Aussie is getting a little bit more love in that respect. But still, technically speaking, if we've got a good sell trade, we sell high with a tight stop, and that's our trade to the downside. If that structure breaks, I think this is a stop reverse, and we head up, and we're starting to talk about Aussie New Zealand to 111, possibly even back to those 2015-16 swing highs at 1300. I don't know yet. We have to get above 108 to prove it, but I'll be watching that stock or this currency this week. Aussie dollar, some of these pairs have been pretty rough. Aussie dollar is back up at the yearly pivot. So another one to watch for this week with dollar index. If the dollar index gets softer, Aussie dollar does have, potentially open space upside. I mean, revisiting 8,000 with a reserve bank that is not talking about raising rates anytime soon seems a little bit weird. But commodities are potentially running so hot that they don't necessarily have to raise rates until they're talking about, oh my, our currency's too strong. Then they start raising rates. But that's, well, I take that back. That's no bank is going to do that. It's going to be, I mean, we haven't really seen a lot of inflation concerns out of Australia. They will start jawboning the currency once it gets back up to 8,000, just like with the New Zealand dollar as well at 75 and higher. So again, this may not even happen. We might be right back up at equal highs. If the dollar gets stronger this week, Aussie dollar is a really good looking trade back down to 7,000 or lower. So a tight stop area. We're at resistance. We could have a tight stop area and head back lower. Again, dollar index is something we have to watch. For me to make that decision, I'll be watching dollar index. It could be a situation where if I place a trade and I get stopped out, I look at a stop reverse. So my trade size would vary. I'd take a trade. Let's say I trade $1. If I lose, I trade $2. And if I'm right in the direction catching that second bid, then we make some money. We make some net profit. CAD Swiss, since we had Swiss pullbacks, I'm still watching CAD Swiss to get to the upside. Right now we're at 73.94. Some indecision on the day, but hopefully we'll recapture these highs around 74.50 to 7,500 and look further left. I would love to see the CAD Swiss all the way back up towards 76. So we may see some pullbacks on CAD Swiss, but all in all, I like this profit area. I like this profit area. Any dips, I'm buying dips on CAD Swiss. Okay. CAD yen, we did some of the yen crosses. Swiss yen 127.95. I did add a short position here at 127.10. This is another one I'm just going to sit and wait on. If we get back below 124, looking for a topping pattern to short it. We have a yearly pivot here. We have a yearly pivot here. It's going to take some time. This is also a kind of runaway rising wedge. But if we have this structure, resistance, 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 we're right there. The big key for this one to really give the bears a nod and show they're taking control is they just have to break this low at 124. We break this structure, take out these lows at 124. I think we put in a top on Swiss yen, and we're having the same conversation we talked about for the last several months. We're coming back to 121. We've got our lows here at 118. We're just looking to trade on the right-hand side of this trend line. So confirmation is going to be important, obviously, on some of these pairs. Euro-Aussie, this is why I didn't want to do anything crazy on Euro-Aussie. We had a chance to buy. We were selling Euro-Aussie. We had a chance to buy. Worked out really nicely with a ton of volatility. But you can see that the commodity strength is returning. The Aussie strength is returning. And this might revisit some of these lows. If you look further left, I'm going to go to the weekly chart on some of these. Some of these big pairs, I mean, this is a time that if you're trading the current trends, 4-hour structure, 1-hour time frames, indicators, whatever your buys and sell zones are showing, that's great. On the higher time frames, it's important that you keep an eye out for these major levels. Even though the market seems like, oh, right now it's in the middle of nowhere. I mean, look, the Euro Aussie may be coming down to 4,000, which we're trading at 48.86. So if we're going to see this big commodity push and we're going to see commodity-based trends, Euro Aussie maybe wants to run to 4,000. If I'm a buyer, something has to tell me like stop looking to buy at 48.85 if this is going to drop to potentially 4,000. I know it's already dropped 1,000 pips and it's hard to justify selling right now, but we can sell with stops. We can sell with trends. We can go with lower highs and lower lows if this is going to continue to go down. So I think right now Euro Aussie probably looks good to revisit some of those lows. Pound Aussie, same thing. And with those pre-summer pushes and trends, I mean, look at the Pound Aussie, right? We had our aggressive sell-off. Let me zoom in here so you can see a little bit better. So we had the aggressive sell-off, pulls back to the weekly pivot, flushes all the way back down, and it's not really a key support level. You go further left, you're going to see that key support level at this 7,400 level. This is support from 2021, January of last year. Okay, that is support. Next level is all the way down here towards the historical lows post-Brexit. So could I see the Pound Aussie, resuming where it's high, low, little retracement, flushing lower? Sure. We get to 74. We might form a falling wedge down to 7,000, and then we get a recovery. But I would say right now, Aussie looks good to have some strength. Aussie strength, probably New Zealand strength, probably CAD strength. All right. And I'd say, the pound has been getting hit pretty hard despite a rate hike last week. The euro as well, despite rumors of a rate hike later this year, we will see. That's like, I feel like the probability of the ECB raising rates is very slim. But they might, you never know. They haven't done it since, I don't know, ever, for the most part. So, anyway, we'll keep an eye on these. All right. Pound CAD, I said last week, if we make sure that we hold 6,600, that's a key support level. If we break 6,600, we are certainly vulnerable to the downside below 66, down to 6,000. So if it's open space to the downside, I'd rather be short. But if it holds this area, there's a short-term recovery level, and we could be putting in some lows. We've seen some really strong support resistance levels on Pound CAD. So oil's a factor here, obviously. Dollar index is a factor in how that plays out. But again, it might be wise. This is probably what I'm doing on a lot of my trades. Trade smaller. That way, if I have to switch directions, reverse directions, go with the better breakout and the better momentum, I might just increase my trade size. So if I took, as an example, if I took a trade right now on the pound Canadian dollar and I traded for $1, okay, if I lose, and again, not just automatically flip and go the other way. It's like I'm not just gambling here and like flipping directions. I'm not going to chase. But if I deem that this is breaking, pausing, and going, then I would get back in with a $2 trade size and go after some gains. Now, if I lost, let's say 100 pips, and I have a $2 position, I need 50 pips to get back whole. If I have a net profit with pips and in dollars, then obviously I'm going after net profitability. So I'm going to try to do my best to mitigate some of the losses by changing my trade sizes, but trading with confirmation, trading with alignments, trading with indicators, and trying not to fight what I see. Okay. All right. Pound Swiss is another one. Pound Swiss 22.77, still staying in the channel. And I still have a couple bull positions in here. If we get to 2450 to 2500, I might end up taking some profit. If the pound Swiss goes up, I'm still looking at this recovery into this pocket zone around 29 to 3000. Okay, but we are still, very much entrenched in this range. We have past resistance way over here, which price has been finding. That is a steel stock that's running hot, which is good because my profits are still running on that. Anyway, I want to see what happens this week on the Swiss. We had some decent lows here, some decent highs. If we get back up to channel highs, one thing I'm watching as far as the Swiss franc in general is the Euro Swiss. Okay, Euro Swiss trading at 102.80. Now, is this still in the works for a low to high recovery pullback, and we end up making a run back up to 106? That could be our three-wave correction. Wave 1, 2 is a pullback, 3 is another push. If we get to 106, I'm taking some pretty healthy profits there. And of course, as we mentioned, is this a larger reversal pattern in the making that might take 3, 6, 12 months to play out, but in the bigger picture, this could be an excellent trade that we'll certainly be focused on in the flex room. Okay. All right. What else? Let's go dollar CAD. Dollar CAD, interesting. So I'm not in dollar CAD. We end up taking some break evens. We were long in this one from 24.50. We got long again around 26.50. Had a chance to take some profits, moved stop losses. I thought we were going to crack the 29.50 to 1.30 level. We did not. We're sitting here. Okay, Square. I can get that one in for. All right, good. Equities on demand. I'm going to get a closed position on Square. Let me check this really quickly. So trading at 137. I need to put a limit order in on Square for 140. So Square, close. Okay. See if I can get some cash back here at 140. All right. So I'm going to keep it on that one. So my break even is 118.42 on Square. I'm looking to close out at 140. It looks like we're making a nice little jump. So 139.20, if that gets filled, excellent. That would be a $22 per share little recovery. Like I said, I might miss out on some of this tech recovery run, but I didn't start dabbling until they were all beat up anyway. So I'm just trying to take some of that profit, get that back into free capital, and start applying that to where I think it's going to be useful. Let's go back to dollar CAD. Dollar CAD 25.96. So what am I watching for? Well, we have some support in here. That's still valid. Okay. We have some range resistance. And what am I watching for? Well, I still think that if we break below 24.50, and again, oil could play a big role in this. If oil is aggressively recovering off of that 94, $95 bounce, then dollar CAD could be vulnerable below 24.50 all the way back down into the zeros, 1.20. That would be a pretty good trade. Now, I hate to miss it or chase it, but one way we could trade the structure is, let's do this. So let's say that we get a breakout like this. So right now, I don't think that we're like full on bearish. Okay. I mean, we did not get a chance to really sell the equal highs. We're just getting a lot of volatility on dollar index right now and oil. But if we get a clean break of this structure, this channel, and we have any type of retest, I would look for oil to head or a dollar CAD to head lower. All right. So even if this were to make a clean break for it, break and a flag and go, break and a retest and a go. Anything on the right hand side of this channel to me looks like we're vulnerable to come back down to 1.20, which is a great trade. We could sell this, at 24. We could sell this at 25 or 2600. Paramount. That was a stock from Elite Signals not too long ago. Good. I'm out of that trade, but nice to see it's doing what I wanted. All right. Anyway, dollar CAD's good. Dollar Swiss. So Euro Swiss I'm watching closely. Dollar Swiss watching closely. Dollar Swiss is pulling back 93.11. I'm still going to keep buying this stupid thing. This is well, it could be like the easiest, most consistent range trading, where every time we crack 93.50, we just buy dips and then take profit again. Buy dips, take profit again. Buy dips, take profit again. And we'll see how long this has to last. I also think this week, one thing that's going to be newsworthy, I should have mentioned this way earlier in the session, but for Forex Factory, we do have a Swiss National Bank rate decision this week. It's not expected to change. We have the policy assessment plus the rate decision expected to stay the same at negative 0.75%. If the Swiss National Bank is showing zero interest in raising rates, and they're going to remain at negative deposit territory, they could have bigger plans in the works for seeing the Euro Swiss or some of the other currencies at certain levels. Okay. And man, we have some of these stocks running super hot. So United States Steel running hot to new highs. CLF cracking some highs. This is all good. All right, so look, these are steel. These are steel-based stocks. These are commodities. You could look at also your DVC, FTGC, uh, making some big gaps to the upside. Once again, 26.31, DBB, 25.38. Corn, I always do that one. It's the corn fund here, 26.49. So we just had some credit spreads running on these. FTGC, 28.47. So just responding off of some of these recent movements. Steel and aluminum, Alcoa is killing it. 88. Look at that, just a dip. I mean, from $92 down to $70. I mean, so volatile, but man, such a good stock just to buy dips. Alcoa is already up 25% in the last 2 weeks. It's nuts, man. Stuff is moving in the commodity world. All right. A couple more things before we go. So Tron, I hear you on your yen stuff, right? Like I said, you were asking earlier about all these yen pairs. I just hope that your trade size is small and your exposure is. Look, I'm in drawdowns too. I'm short Aussie yen. I'm going to draw down. I'm short Swiss yen. I'm going to draw down. I'm short dollar yen. I'm going to draw down. That's it. But my trade size is small. The exposure is minimum. I'm going to wait it out a little bit because I think we have some really good technical setups. Dollar yen on the daily time frame. It's one of my it's a great technical setup. We have overstretched conditions on my bar count. We're at this capitulation move higher. We're looking left on the chart, seeing multi-year highs. It, yes, of course, can drift higher. Do you know how many traders are sitting here with shorts right at this high at 118.50? Probably a lot. So now the question is, how nervous do they have to get? Is 119 the high? Is 120 the high? Do we have a move all the way up to 124 before the thing drops back down? And I'll tell you this, if you can survive whatever's going on right now, I wouldn't be surprised if this, let's say we hit 124, this thing drops all the way back down to freaking 100. I mean, like, this happens in Forex. The market runs and traders don't survive, but it does exactly what you thought it was going to do, which is go down. And it's just where. So if it's not 118.50 and it's not 120, well, look left on your chart because it's probably up here at 124. But we might see this move get capped pretty easily, and it sets up here, starts to work its way over. It could roll back into this 200 EMA, roll back into the FOMC breakout pocket. We've already seen some inefficiencies after FOMC. The market, I think, jumped. Well, I mean, we expected a little recovery and we got it, but the market jumped a little bit overzealously post FOMC. And so far today, we're still looking green. Like, this is the pre-summer push, short-term bullish market. We said this last week. Pre-summer push has a lot to do with bullishness. The market loves to run bullish and loves to run hot in April and in May. And then you have the saying, this is a long time adage in stocks, sell in May, go away. So we might see risk appetite that is sustained for the next month and a half, 2 months. But once you get into, end of May, do stocks take a little hit? Do stocks take a dip? I don't know. But do I think that the stock market makes this straight run up to revisit the highs and we get to new historical highs? I don't think so. All right. So look, we've already talked about this. We've talked about this structure. We have lows. We have lows. If this is a crown pattern, that right tip is right around here, around 450 to 460. And if you're looking at 1, 2, 3, 4, 5 daily candles in a row from last week's trading post FOMC, we usually don't have those big streaks that extend more than 7, 8 candles in a row. If it gets to 10, it's like, all right, that's a move to easily fade. But the market is clearly like just pent up buying interest that's just pushing relief rallies. And that's okay. So we let it do its thing. All right. Yep, I'm right with you there, David. I got a pending at 119.90 on my dollar yen, 119.90. So we're at 119.16. I got a pending at 119.90, 119.90. Pending sell. And again, it's small. I'm just going to be patient, see how price responds to these areas. 120 is a nice round number. I'm prepared to take this thing as high as 125 if I have to. I don't want to, but given the fact that if I did that, if I can survive whatever this gives me, take it back down into a pocket, probability of that getting hit is really high. Probability of this EMA getting hit is very high. All right. So it's just if we can, catch this move, time this move, stack into the winning position once we have some confirmation, we can turn this drawdown to a really nice profit. Okay. All right. Anything else? Any stocks we're going to take a look at? I got a big list today, like I showed earlier. Equities on demand class coming up at the top of the hour. We're going to take a look at this list. Some of these stocks we are losing or have lost since last week. I'm going to revisit. Looks like right now the markets are in green. So SPY is up for the day so far. DIA is green. Qs are green. VIX is getting smashed hard. So volatility plays, I know that the VIXM, I didn't lose it at 34. It's back down to 32. I'm going to go out and see if I can get any premium on another $34 call. My break-even price, I'll do here. So break-even, oops. Break-even is 29.70. Break-even is 29.70 after that covered call expired. And I might just wait. I mean, it may not do me any good to cover it unless it's worth it. So if it's like, 20, 30 cents, probably not going to do it. I might just wait and buy more at the lows. So I'll hang on to VIXM for a little bit. VIXY, VXX getting reset. Volatility is down. Stocks are up. So that's not a bad thing, right? But like I said, if stocks are up, expect commodities to also be pushing. I'm seeing steel, aluminum, raw materials in general up. Energy probably up. Look at oil. Okay, oil is firmly up today, 3.85%. We're responding off that monthly pivot. Again, a wild pullback. We had like some 20-some% correction on oil. Okay, 27% correction on oil, but we're either going to shake this volatility out where it's volatility up, volatility down, and we have this big shakeout, okay, where the markets cool down a little bit, or oil's just going to be running hot. And this was, a chance to buy the discount, and oil's still running hot. As Daniel said that earlier, 160, that's the demand killer. Sure, 150, 160, 200, it's going to make everyone hate the price of oil again. And we've said this. We said the way to get into green energy is to have a straight up crisis. If we have a carbon energy crisis, guess what? People are looking for alternatives, and now the consumer has spoken. Because now it's like we need it. We need it. We want it. And so the question I have is big energy willing to actually make that transition and help that transition? Or they're like, uh, times are too good right now at $200 a barrel. We'll get to your green energy stuff here after we cash in our tens of billions of dollars, right? So anyway, all right, traders, I'll let you go for today. We'll be back on Friday for the Pulver report to wrap things up. Flex traders this week. See you Tuesday, Wednesday, Thursday. Equities on demand students. We'll see you here in a few minutes, and let's get started for another busy week. Hopefully, we have some cash to work with. I do. I freed up about 150K over the weekend, and if I can lose a couple more stocks today, that'd be excellent. Hopefully, Square is one of them, and some other ones to boot. So, all right. I'll wrap it up here today. If you have any questions, let me know. You can always leave comments. I appreciate the thumbs up and likes for the videos like this. We're doing live sessions or any videos I do on my page, youtube.com/Chris Pulver. Appreciate it. All right, everybody. See you on Friday. Traders, will see you in the rooms this week. Thanks. Bye.